Hello traders, greetings. How are you all doing? How are your trades going? In this video, I'm going to show you how to mark the supply zone on the 15-minute chart and then within the next 2 minutes, how to enter a trade at the lower time frame. I'll explain how to take trades in Bitcoin, that is in the Forex market. I'm going to teach you all about this in this video. This video could be very useful for you, so make sure to watch it fully without skipping. Let's get into the video. Before we enter our trade, first we need to see what the market is doing and we need to check what the trend is. So in this part, I'm going to use the flow number. So if we want to go into a lower time frame entry, at that point, we need to see what the current market is doing. So what I've done is I've locked the structure. So what that means is there's a low here and there's a high here. From this high, if you see the market has broken that low. So the market has turned down. I'm looking for confirmation. Again, this low has been broken. Okay, so when I look at the trend at this point, it's a downtrend. So in this area, since it's a downtrend, what will I do? Since it's in a downtrend at that point, I'll identify where the supply is. So what the market should do is it should leave with an order block along with an imbalance. Here, the market is leaving with an order block and imbalance. If it comes back to that area, that's when we enter our trade. This is our rule. In this situation, after locking the market structure and identifying the order block, the market has broken this low. If you apply the previous discount rule, this area becomes the premium area. So when the order block comes to that area, we can enter the trade. That's why I've marked a supply zone there. Below this supply, I've identified and marked an inducement. Taking this inducement into account, what should the market do? It should touch my supply and then drop down. So first I wait until the market reaches my supply. What do? I draw a line here and set an alert at this spot. Then I just wait. Only after this alert is triggered will I enter the market. What am I doing? If the market goes down, let it come up. I wait and watch. So there's a low here and there's also an inducement here. Only after that inducement is taken out will we enter the trade. Until that happens, we traders won't make a move. You already know this. What should you do? Properly identify a high and mark a supply zone at an important level. Here, I've marked a 15-minute sell zone. The market is reacting there, staying at that level, coming down, and then going back up again. This is what we call consolidation. Without touching our order block, we won't enter any trade. The market goes down and breaks this low. Now, there's a higher chance for the trend to turn into a downtrend. That's all we know for now. Okay, let's see. Yes, for confirmation, the market has broken this low as well. The broader market currently presents a variety of other potential trading opportunities, but we are specifically focusing our attention on identifying the best strategic entry and exit points for our positions. We are patiently waiting and closely observing the current price action to see exactly at which point it makes the most sense for us to enter. Let us stay focused and see what the market ultimately decides to do next, whether it continues to trend further down or begins to move back up. I will now provide a thorough step-by-step explanation of the most effective way to approach this specific market scenario. From here, my end time frame is 2 minutes. After 2 minutes have passed, this is the kindling I tap. It has mitigated for me. I'll identify the structure from this spot. If you look here, he placed one in left. Here is a low, so he broke and placed this hand. It went up again. Here is a hand, a low, this seat, a hand, and a low. So if you look, what is he doing at that spot? Sir, what does the time frame say? It says downtrend, it says low time frame. So what should we do? If the price is going up like this, and if this supply is broken and it keeps going up, if I take an entry at this spot, it would be like unnecessarily taking an SL here. So what should we do? We need to look for a confirmation and then go. If it goes up twice, what will he do? He needs to cut the recent low. So if it cuts like this and then comes back up, we can enter our trade. Let's keep the logic in mind and see how this trade works out. So the mark is above at the higher time frame supply. Next, what does it do? We need to see whether it goes down or moves upward. Because here it hasn't taken out any previous lows, so the trend is uptrend. Then we can cut the recent low. So here there is a recent low. Let's see at which recent low it breaks and closes below. It comes down. Again, no, it's just consolidating there. Let's see what needs to be done. Once again, it's moving up. Yes, let's see what happens next. It's gone up, and at that spot, I've marked each recent low as valid. So if this recent low is broken and the candle closes outside, I'll decide not to enter the trade. Yes, just as I expected, the institution has forcefully broken that recent low with activity. So what happened? The previous move from here was bullish, but now it's broken this much, confirming it's a bearish move. So I have confirmation of two trends. Higher time frame is up, lower time frame has pressure. Now, if I want to enter a trade, what kind of trade should I go for? We need to point out the order flow and enter the trade. That means I can take a primed out like this. After this, let's say we need to place an order. So there's no order flow length. I'll keep some very tight. If you think like that, you can point this out and enter the trade here. So just above this top, we can set our stop loss. Because in the Forex market, it will just take out a weekly stop loss and move on. So what do I do in that case? Now the supply is above and the market is below. We can plan our target with the 15-minute demand. So where is the 15-minute demand? I'm going to plan for that. I've already marked it here where the market moves up with institutional activity and imbalance. There's a demand zone here. So I can target this demand, the higher time frame structure, the higher time frame target and entry, but only the entry is on the lower time frame. Now I'm coming inside. I've marked this area, my 2-minute order flow or order block if the market taps it. So in the lower time frame, what we do most is focus on order flow. So in this area, the entry is above, and above that is the stop loss. From there, I have the higher time frame demand target. Yes, we can plan this as a TP, take profit. This is one way. If I feel that the stop loss is too big, what can I do? I can place entry 2 above this because I need an opportunity to average my entry. Since there's a chance for the market to come to the order block in this area, I'll continue with this. So what I've done is I've separated entry 1 and entry 2, and I've set the target below. Now the market, whether it touches the order flow I've marked here or the OF that's here, or if it has the ability to reach this OF, or even if it doesn't touch it and just goes up, or if it touches both and then goes up and hits my stop loss, these are all possibilities. So this is my plan. Similarly, what I've done is I'm planning my TP based on the higher time frame demand since it's coming from supply. This is also my plan. Once I finalize this plan, there won't be any changes to it. When I take the trade, I'll stick to it, but I'll observe what happens. Whether it goes up in my order, let's see what happens. Whether it comes all the way to the order block or not. If it doesn't go up but touches my order flow and then goes up, that's the second idea. Even in this spot, there's a trigger. Here, the order block I've marked also gets triggered. Next, what could happen is from here, it could go straight and hit my stop loss. The share market is all about probability. What we're teaching you here, everything you're learning is all about probability. I'll tell you, there's no guarantee that things will happen exactly as described. Don't get the idea that 100% of channels will work in the market. The share market is probability. What I'm teaching you and what you're learning is all about probability. Now let's see what happens. Whether it goes up, but we also have to see if it goes down and hits the take profit. The market is moving in my direction, so from there, even if it goes from here, it could hit my take profit, or it could also hit my stop loss from here. This is what we call probability in the share market. Next, let's see what happens. The market should come down. If it goes up, then it's going up. If it comes down, it will hit the take profit at the spot I expected. Now, what did we do? We marked the supply zone with the 15-minute time frame. We have to confirm it with the lower time frame as well. We entered, and it's moving in our direction. So this might look very simple to observe, but what you need to do behind the scenes is you need to practice a lot and gain experience with all this, and only after that should you move on to live trading. The entry method I just showed you now, you need to learn this method properly. If you want to do that, check out vavotradinginfo.com, which is my website. If you are coming here for the first time, click on register here, enter your name, your email ID, set a password for this, and register yourself. After you come in for the first time, and once you have created your username and password, click on courses. The available courses will be listed here. What you are learning now is the sync trading concept. In this course, there will be SMC interaction sync trading. Here, you will learn what multi-time frame analysis is, and then you will lock the structure on the 15-minute time frame and on the 2-minute time frame. I explained that you can take trades accordingly. So this is the concept I taught you. You can learn all of this completely through the videos in this section. Similarly, as you learn, if you have any doubts, you can get them clarified, and only then will you be able to take live trades. Right now, if you are trading only in Nifty and Bank Nifty and doing option buying, then this course will be suitable for you. So what have I included in this course? How to identify a pullback, how to use that to lock a market section, and then what is an order block, what is a fair value gap, what is order flow. Now I showed you order flow, and even if you see it without an order block, how can you take trades? That's also covered here. After that, we'll find out what inducement liquidity is. Using this, you'll be able to take two types of trades. One is inducement and the other is off and OP entry. By using this in Nifty and Bank Nifty, you can capture 20 to 30 points per day. If it's Nifty, 20 points, and if it's Bank Nifty, you can get 30 to 40 points. But the rule I mentioned must match there. Don't think you'll get this trade every day. Only if our rule matches there, you can take the trade. Let's go. You have spent a significant amount of time studying, and you have deeply learned about the complexities of trading psychology, and you have studied and studied and studied until the concepts are ingrained in your mind. If you still find yourself having any lingering doubts about exactly how to approach the market, or if you are asking questions about which specific setups we worked on throughout last week, please realize that all of these various setups and strategies should eventually become crystal clear to you as you continue to review the material and apply these lessons to your daily trading routine. If you were to ask me what would make it even more effective, it's this specific approach to learning. Even before you ask, you have the opportunity to receive this kind of support from me. So you can make use of this support by joining this course. I will guide you on what to do in the market and exactly where the market is heading. I will be there in the live market, and I will share the trades I take with you. So when the market is moving like this, it will be very beneficial for you. This is entirely support for you. This is not a call service. I won't be giving daily calls or anything like that. My intention is for you to learn and practice, and in this kind of market, my primary intention is that you should be able to successfully book your target profit, which we often call TP. I will make sure to let you know exactly when the market is moving in your desired direction or when it is unfortunately going against you. The specific reason I do this is to clearly show you just how effective our trading course really is. So I will be carefully tracking the market movements for you. If the market moves in the direction you expected, you can confidently book your profit at that exact point. Watch very closely what the market is doing right now, and from there, if it moves up further, as you saw, your TP was hit. So if you feel you need this kind of internet support, contact me at the WhatsApp number I've provided below. This is the profit our student made, which I have shared with you. So read, practice. Stock market is all about probability. I will teach you at which points you can earn from that probability. If you like this video, please give it a like. Share it. If you haven't subscribed to our Chennai channel yet, please subscribe. I'll see you again in another good video. Thank you. Take care.